What are you serving us this morning?
Today we're talking about banking. We're just looking at how 2013 banks performed. And right now we're joined by Mr. Ashif Kassam, CEO, RSM SHVIR. Thank you very much for joining us.
Thank you, Michael.
2013 looks like a very interesting year for banks. I think it posted some tremendous growth. From your analysis and your survey that you released yesterday, what are some of the driving factors behind this growth?
I think overall, one trend that we are seeing is that the non-banking population is now coming into the fold, and that is why the deposit portfolio is growing quite significantly. Last year, the deposit portfolio increased from 1.7 trillion to 1.9 trillion, and that was a 13% growth, much more than the growth of the economy. Yeah. And if you look at our the total banking deposit size compared to our GDP, we have now reached a percentage of over 50%. We are actually at 51.3%. So in terms of the formal banking sector, Kenya is well ahead of the other East African countries in terms of that.
So it's a case of banks in 2013 were able to mobilize deposits at a faster rate than years gone by?
Yes. I think it also take into account capitalized interest, because interest is about 7-8%, which is capitalized. So even if you still take capitalized interest, the overall growth has been good.
Yeah. But profitability also was up, because from your survey, it was up 15.5% as an industry. We're looking at about 124.9 billion shillings for 44 banks. That's quite amazing.
It is, but it's interesting. It's not all the 44 banks. Yeah. It's the top tier banks, that command most of the profitability. The 20 banks at the lower end of the portfolio only make about 6% of the profit. But yes, profitability has gone up. One is that despite the spreads, that's the difference between the interest paid on advances and the interest that the cost of deposits going down slightly, profits have gone up. And I think there are two main reasons. The efficiency in the banking sector is going up. For the first time, we have now reached an efficiency ratio of about 1.5%, which means that the income is 1.5 times the expenses. And 1.5% is good in any market. Okay? Yeah. And I think the investment in technology and other things is also bringing in efficiency. And secondly is the growth. The deposit size has grown, the loan book has grown, and that's bringing in income. What is surprising is that are all the non-performing advances taken into account? The NPA percentage has grown to 5.3%. From 4.8% last year, and what this now means is that we are seeing a trend where non-performing advances are increasing, and to me it's a 5-year cycle from the time NPA is increased to the time the entire provisions come out in the wash, and we are probably on the second year of that cycle with the economy slowing down. So have everybody provided in the all the provisions that are required, and is this profitability correct, or will we see an adjustment in 2014?
It's interesting you mentioned non-performing loans, because speaking to bank executives when they were releasing the results, it appeared that government, which actually is crowding out private sector in terms of borrowing, was actually slow in repaying some of these loans that they take from local commercial banks. Is that the case, or what actually is slowing down? What is actually making the non-performing loans grow?
I think there are two parts. One is that if you look at our total portfolio of treasury bills and treasury bonds, your domestic debt, and the figures are quite staggering, okay, in that area. The bank's total investment in treasury bills and treasury bonds is currently nearly 551 billion shillings. The total government's domestic borrowing is 1.189 billion. Yeah. So that means that the banking sector is lending 64% to the government's domestic debt. What that happens is it slows down the money circulation in the economy. On the other hand, the government is using most of this money that it's borrowing to fund revenue expenditure and not capital expenditure. So the money is not fully coming back into circulation. Okay? And also the delayed payments on contracts and other things is affecting the money flow. So overall, I think that is affecting the growth of the business because one, government is competing with the private sector. Secondly, the government is paying interest between nearly 9% on treasury bills to nearly 12.5% on treasury bonds, and treasury bonds is infrastructure bonds is net of tax. So if you gross it up, it's 17.5%. And that is significant because what that happens is that it increases the cost of deposits even for the banks.
Yep.
And that's also bringing the interest rates very high. Today, normal commercial loans are anywhere between 14 and 18.5%, depending on where you borrow from. And, I don't know which businesses make, that kind of profit to be able to sustain an 18.5% interest rate. So I think that all is having a significant impact on the growth, especially in the private sector.
But over the recent few weeks, we've had government come out strongly saying that they want to exit the local borrowing market. Is that plausible from where you stand? Because at the end of the day, they have to borrow somewhere. But if they exit the local market, then what happens to the local banking industry? Is the private sector well positioned to take advantage of the money that is available with a commercial bank?
First, I have not seen one country where there is no borrowing from the banks. Okay? So there is always borrowing from the domestic market. What you can do is shift that percentage and go out and externalize some of your debt, which is good because it then creates a circulation in the local market. Banks have excess liquidity that they are forced to lend. But if the government brings in this euro bond, what rate of interest is it going to pay on that euro bond? If the Kenya's risk, and based on Kenya's risk, they are able to get a subscription at about 5 to 6.5%. Okay, that will be good because that will release the commercial bank to lend money to the private sector. But on the other hand, if the government starts paying 8.5% on dollar or euro terms, okay, commercial banks will just shift from one pocket to the other and lock their money in the euro bonds. So what will happen, even the most expensive euro and dollar loans today in Kenya, which go at about 8.5%, 9%, if the banks are making 8.5%, 9% risk-free on a government secured bond, why should they lend to the private sector? And even if they lend to the private sector, then they have to build in that risk. And so the local lending rates will still remain high.
Yeah. I want to come back to the increased amounts of deposits to about 1.7 trillion shillings. Is it that banks are increasing the access channels that they have to actually rope in the money that is there in the economy?
No doubt about that. That is happening. One is people are increasing the branch network, but agency banking is playing a more important role because you don't have the huge cost of setting up a branch with agency banking. Mobile money and mobile banking is bringing significant amount of deposits, and a lot of the unbanked sector is now coming into the loop, and that is why if you look at the large telcos, they are now looking and going for NVNOs and creating their own telecommunications network so they can control the SIM card and the deposits.
Yeah.
And we will see a total change in the market, in the banking market, I think in the next 4 or 5 years as new technology comes in. And remember, globally, in developed countries, deposits to GDP is 100%. We are only at 51%. So there is a significant amount of non-banked population that can come, into the sector, into the formal banking sector.
And this race for getting depositors seems to have taken a new dimension. Over the last 3 years, I think it seemed like it's been a two-horse race between two banks, Equity Bank in the KCB group. How about how are the other banks how are the other local banks performing?
I think, if you look at the sector today, okay, and the sector is categorized very interestingly, within the size. But if you look at the top 5 banks, okay, they probably control nearly 50% of the deposit and advances market. Is just below 50%. And then there's the next group of the 7 other middle tier banks, the likes of the CBAs, NICs, Diamond Trust, I&M, and a National Bank, and Chase Bank has now come into the fold into that. And these banks are also, very strong on the service and deposit mobilization. And, the niche market that they are playing with is also increasing significantly. And between these two, really you're looking at nearly 70% of the deposit size, 70% of the asset size is controlled by 12 banks. The struggle is at the lower end of the spectrum, where 20 banks out of 43 banks, which is nearly 47% of the banks, control less than 10% of the deposits and advances. And I think for them, the issue is that the cost of operations are going to keep on increasing. And even if they go into technology investments, it'll be much, for a smaller bank to invest significantly in technology, always is an impediment. So I think that's going to be the challenge. And one of the issues that I always said is that some of these banks at the lower end will either consolidate, or if they don't consolidate because of the reasons that prevail, then they'll be taken over by other African banks that want to expand, or international banks that want to expand into the East African market.
Interesting you mentioned international banks as you wind up. The West African banks that have been operating, they have, over the last few years, they've not been performing that well. They've actually been at a loss-making position. But I look at them from where they come, the countries that they come from, and they're one of the most capitalized banks in those regions. Why doesn't it translate to performance locally?
I guess Kenya is a very unique market. It's a market that is sophisticated. It's a market that is matured. And if you're coming into Kenya, okay, you need to understand how the market operates. Just by having a large, big name doesn't translate into success. People are very used to the brand, the local brands. And so the important thing is, how do you bring your foreign brand and link it with the local culture? And I think that is where they've failed to do that. There's a big disconnect, and this is not only for banks that have taken over established banks. It's also for banks that have set up totally with a new license, and they also have failed. So it's not that we have inherited bad past that is resulting into these losses.
All right. Ashif Kassam, thank you very much for your time and shedding more light into this banking industry that we've seen that is performing way well above our peers in the East African market. So smart. Just no banks are out there just looking for your money so that you can have more than one account.
Isn't that what they always do?
Yeah, they always come off. Nowadays, by there, they are hawking accounts in the streets, so it's become very difficult.
Can I tell you one thing? My bank has online banking. It has an option up there that I can open new accounts when I want it. So I can open as many accounts as I want.
Hopefully, you'll do so.
He will, hopefully, give them more money. Well, we're glad you're watching Morning Express. It is just about the top of the hour. And let me take a short break now. When we return, we have a special guest in studio.
Person of interest, Hashan De Silva. 2 questions. We'll be talking right up in the next hour.
Stay with us.